In today's video, we're analyzing the dollar index across multiple timeframes, starting from the 6-month chart down to the daily chart. We'll break down key levels and what they might signal about future price direction. We'll keep the daily timeframe on the right side of the screen and higher timeframes on the left. This layout helps us see how higher timeframe levels influence the lower ones. Let's begin with the 6-month chart. This candle will close at the end of the month, so it's critical to assess how it's developing. Right now, price has tapped into a major bullish order block, formed by this previous down candle. That level has already triggered a strong reaction, and we expect a significant bounce from here. Looking above, there are 3 key levels that could act as potential upside targets. If the current candle doesn't want to close below this bullish candle's low, then price will need to push aggressively higher in the final week of this month. Next, let's move to the 3-month time frame, also set to close at the end of the month. Price has just tapped into the same bearish candle we identified on the 6-month chart. This overlapping level strengthens its importance due to confluence across timeframes. There's one more level to watch here, the low of this previous up candle. If price closes below this level, it may invalidate bullish expectations. But as long as it holds, the 3 upside targets from the 6-month chart remain valid. Now, let's zoom into the monthly time frame. We have about 1 week left before this candle closes. Once again, the same key support level appears here, aligning across the 6-month, 3-month, and 1-month charts. This reinforces the idea that this area is a strong support zone. From here, price is likely to start seeking those higher targets. In addition to the upside levels we've already identified, we should keep an eye on the low of the previous up candle. If price intends to push higher, it should not close below that low. From the daily view, you can see this level aligns perfectly with a swing low and a bullish daily candle. Also, there's another swing low just beneath that. It's possible that next month's candle could dip into that area before continuing upward. Let's look at the weekly chart next. A new weekly candle has just opened. Last week's candle formed an inside bar, price stayed within the previous week's high and low. This week, price respected the low of that bullish candle, and we've already seen a bounce. The next key level is the high of this recent down candle. If price can close above that level, it confirms bullish momentum. That would open the door for a move toward the last bearish order block, a key resistance zone. Why is this level important? It lines up with a fair value gap. It matches a previous major swing low to the left. We can expect a strong reaction from that area, possibly a place to take partial profits if you're holding long positions. One more bullish sign, when price revisited the previous swing low, it only wickered below it, without closing beneath. That suggests demand is holding firm. Finally, let's check out the daily chart on the right. A strong bullish candle has just closed above a significant bearish candle. This signals a potential shift in momentum, especially since price tapped into a higher timeframe level right before this move. Combining both the breakout and the higher timeframe context, we now have a high probability setup for continued upward movement. Let's recap the key points. 6-month chart, price bounced from a major support zone. 3 clear upside targets remain. 3-month chart, same support level holds. We don't want to see a close below the previous up candle's low. Monthly chart, price may revisit a nearby swing low but is likely to seek higher targets. Weekly chart, a close above last week's high would signal bullish continuation. Daily chart, momentum has already shifted bullish. Price is now targeting higher levels. Overall, our analysis focuses on higher timeframes, especially the 6-month chart. There's no need to go lower than the daily timeframe to see the big picture. That's how smart money approaches the market. Thanks for watching. If you found this breakdown helpful, don't forget to like the video and subscribe for more multi-timeframe market analysis.